Okay, good afternoon or good morning, everyone. Thank you for joining Kepler Analytics and our guest speaker, Tony DeFazio, for our 5th webinar of the year. Hope everyone in Melbourne is defrosted after the chilly start to today. Apparently it was the coldest morning in 4 years. So no doubt everyone, if you're working from home, you've got your UGG boots on. My name is Kylie Smart and I'm the General Manager of Customer Success at Kepler. Before I introduce you to who Kepler is and our speaker, I'll share a few webinar tips. So for those who haven't joined one of our sessions before, you'll find the settings for the sound in the top right-hand corner of your screen. And if you have any issues with the video quality, you can refresh your browser up the top. You'll notice to your right-hand side, there is a chat box. So we really do, if you're on here now, we'd love for you to say hello and tell us where you're from, what retail brand you're from. And it's definitely a great opportunity today. We always encourage everyone to ask questions, and quite often we love some of the interesting questions that everyone brings to the table. So please don't be shy. To start off with, who is Kepler Analytics? Because I can see a few new faces in our audience today. Kepler is a unique people counting technology, and the problem that we're aiming to solve our clients is to help better understand your customers' journey and path to purchase in store. We give you fantastic insights and measures that you cannot see with your normal day-to-day sales measures. So one of the things that retailers using Kepler see is generally increased sales, improved customer satisfaction, and decreasing your operating costs at around 87% of their network within a year. We have one speaker today who is Tony DeFazio, who we're delighted to welcome. And he is our General Manager of Product and Retail Insights. We also have David Gordon, our CEO, who will be joining us at the end of today's session as well. Tony is going to be taking us through the financial year review and talking to us about things such as, is COVID over? What has happened to traffic patterns and the way our customers are behaving? And also store growth and network changes such as refurbishments, relocations. He's going to be talking to us about some interesting things in relation to that. So can I please welcome Tony to the stage? Welcome, Tony. We'll give him a moment. Good afternoon, Tony. I'm going to hand the microphone over to you.
Nice one, thank you. Hello, everyone. Good afternoon. I'm going to get straight into it, but those that know me know that I don't do formality very well. So if there's any questions that pop up, please do jump in. So the trends 22 versus, or FY22 versus FY21. So historically, most of our radars we have compared to a pre-COVID experience. We've looked at recent events versus FY19 or corresponding periods before this wonderful pandemic and all its wonderful little hidden blessings that it's given us. I'm yet to find any, but I'm sure they're out there. So what we're going to do this time is just mix it up a little bit compared to the prior year. So we've used as our benchmark the Kepler Retail Index. Kepler Retail Index is a fantastic product. It's a like-for-like basket of about 1,850 stores across Australia and New Zealand. It's aggregated data. There's 11 key metrics in there. It goes from country down to state, even down to shopping centre and category level. There's about 150 isolated shopping centres in there. I strongly suggest if you haven't had a look at it, it is worth getting your hands on. It is some seriously powerful data. And it's real. It's based on real retail data. It's based on what happens in our stores and across those 1,850 stores. Anyway, let's get stuck in. So last year, FY22 compared to prior year wasn't a great year. Sales did go down in both Australia and New Zealand. New Zealand was a little bit softer than Australia, so sales down about 6.1 in NZ versus about 5.7 in Australia. The key difference between the two is around the inside traffic variation. So if you look at that central column in there, Australia had a lot less inside traffic in stores, about 20% down on prior year. New Zealand only dropped a little bit under 8 only. Imagine sitting a normal pattern on dropping 8, so that'd be terrible. The difference continued through in that Australia was left with a far more purposeful shopper. So sales conversion actually held its own. So sales conversion went up 11.7. We lost a lot of people, perhaps some of the hangers-on or the undecideds or the browsers or the tire kickers, perhaps the group size, combinations thereof. But what we were left with in Australia was a far more purposeful shopper. And so sales conversions did go up. Sales conversions in New Zealand didn't quite fare so well, so they still went down a little bit. They retained a lot more inside traffic, but they lost on sales conversion. You can see outside traffic has trended down versus the prior financial year. We're going to dive into that a little bit more. But the key metrics are sales were down, transactions were down, and if you balance out the sales conversion, you've got ATV going up 5, a little bit over 5 in Australia, a little bit over 2.5 in NZ. No doubt there's some price rises and some CPI and some other stuff that is building into those price rises, and I'm sure everyone's got that in the back of their mind. Anyone who's gone through the last 6 months in Australia, if we hear the phrase cost of living one more time bandied about in the media, I think we're all going to get a little bit stale to that one as well. All important stuff, but they're the underlying metrics. What I want to do here is just break this down just a touch, and just look at a couple of different clusters, right? So I've got lockdown months excluded. Any month that had a lockdown, we've just excluded that from the 2022 and the 2021 FYs. And then we've got the full year. So you just want to see that perspective of what happened. Did the lockdowns have an impact overall? And you can see that when you exclude the lockdowns, it was generally a slightly better result versus the full year across what has happened in the sales dollars, again on that like-for-like basis. If you go back a couple of years, then and you go back to FY 2020, you can see that the growth is still there, but not quite as strong. We've got a lot more lockdowns in FY 2020, but we're excluding those same periods. If you go back versus 2019, you can see that we're actually in some pretty soft territory. You can see that there's a bit of negativity last year compared to where we were in 2019. So it's still quite soft, and there's still some significant weakness in some of those metrics, and some of those sales dollars, in some of the inside traffic. And in fact, it's inside traffic that I want to talk about now as well, outside and inside traffic. Again, that same sort of breakdown, taking out the lockdown months of last year and comparing them to the full year. You can see that outside traffic is gradually starting to return. It's still down, but it's starting to get back to at least this new norm. So to answer Kylie's first question, is it over? Is the COVID impact over? To a degree, probably. I think there's still some growth in traffic, but we're going to see a little bit later on as well that the behaviour pattern our customers are exhibiting and the traffic is exhibiting, that has changed. So is it over? Sort of, but with a big but. They have changed their habits, they have changed their patternation, their visitation, their sales conversion methodologies. Traffic is starting to bounce. Will we ever get back to pre-COVID levels, given that we're still 35-ish, 40-ish down, depending on how you want to look at it? Don't know. It's going to take quite a while to bounce from that, but we seem to be certainly stabilising around where we were last year. Inside traffic's very different. Inside traffic is far more resistant. So we do have far more purposeful shoppers. We do have a customer that knows what they want before they come in, that omni-channel experience, the online supporting the offline supporting the online. That's more common than ever. There's some interesting stuff that Kepler's doing on that over the next few months. Stay tuned for what you'll see on that front. But the inside traffic is certainly a lot more resisting. Down 16s, down 20s, depending on how you want to look at it versus prior years. So still a little bit more stubborn. I had a conversation with someone recently, and they said, I thought they might have jumped the gun a little bit. They said to me, listen, the next 12 months is just about as customers start to return. Yep, tick. I think customers are starting to return. Happy days on that one. All we've got to do is be there and the sales conversion happens. That set my teeth on edge. I'm a bit old school to sit there and say retail just happens. It doesn't happen. It's the hardest thing I've ever done in my life. But anyway, the sales conversion is not just happening anymore. Talk about like for like when it relates to, yeah, absolutely. So these are, if I go back to that slide, these are like for likes with the lockdown exclusion. So if they're excluded from 1 year, then they're excluded from the prior period as well. So if they're excluded from 2022, those months, then they're the same months are excluded from FY19, FY20, or FY21. So it's the same periods and the same baskets of stores. So what we're seeing is the increase in sales conversion versus 2021. That is coming back to a norm. In fact, if we're in NZ, the vast majority of the year in sales conversion terms was actually behind FY21. In the Australian context, it started out really, really strongly. It got to Christmas and then it started to shift, and we're now about parity to where we were this time last year. The gift of the really intentional, the really purposeful shopper, that customer that just comes in and says, I'll take it regardless. I think that trend, we're starting to see that trend has gone now. So is, again, in this context, is COVID over? Yes, with a but, or sort of with a but. The behaviour has shifted. The sales conversion is definitely not something to take for granted. You can see in this chart, this is the increase versus the same month in the prior year. That is definitely on its way down. If you're in New Zealand or you've got your New Zealand stores, there's definitely some more headwinds over there. Looking at inside traffic is definitely, this is versus 21. Inside traffic is returning. We're still very soft versus prior year, still down 20-ish, still down 8-ish, depending on your country, but it is returning. So we are starting to get to parity versus FY21 versus the same month from the prior year. So in fact, we're even starting to see some positive territory in Australia for the first time in a very long time. So this trend is definitely up. Are customers coming back? Yes, but at the same time, sales conversion is going backwards. In fact, if we have a look at it, outside traffic, again, we can see outside traffic is starting to get into positive territory. So again, these trends versus 2021, the red zone is the negative zone. We can start to see we're crawling out of that, which is fantastic. I have put in versus 2018-19 just to give you some context. So before we all go and sound the alarms and say, hey, we're back, we're still in the 20s to teens down versus pre-COVID experience. It's not time to sound it's all over, right? So that's why I say, is COVID over? Sort of. It sort of is. This is new norm. What is outside traffic? Great question, Richard. Outside traffic is traffic that passes by a retail store. So outside traffic is the aggregation of all of our clients across those 1,850 locations, people that pass by within a distance that they can reasonably enter the store, about 5 metres. So they are seeing the storefront, they're passing by. It is different to shopping centre traffic. So a shopping centre presence may be an entry or will be defined a little bit differently, and different people will explore different ways throughout the shopping centre. Our version of passing traffic is they are passing by the same like-for-like basket of retail stores. I hope that answers your question, Richard. If I haven't, please do ask a follow-up. Thank you for your question. So you can see that, excellent, thank you. You can see that it is still a little bit soft versus a few years ago, but we're coming back, sort of, we're back sort of with a little bit of a but. Transactions are coming back versus last year. You can see New Zealand a little bit softer, but that's definitely a trend up. Australia is spiking back up. This is a real key point of difference. This is ATVs, Australia versus New Zealand. There was a real spread that happened around January. So ATVs were basically moving in a similar sort of pattern for most of the year, right up until Christmas. Straight after Christmas, the Australian shopper, perhaps maybe some of the cost of living stuff that we heard about over and over again, 10%, 12%, 8%. There is a big difference in ATV. I'm sure some of that is price rises. I'm sure some of that is also bigger baskets. Average transaction value, James. So total sales dollars divided by the quantum of transactions delivered in store. And you can see that spread is definitely happening. New Zealand's still going up, a little bit softer towards the tail end, but definitely a big spread across there. The behaviours are not uniform across different shopping centre types. So we are going to look at, and we'll break this down a little bit because different shopping precincts have behaved in different ways. So CBD locations have actually performed relatively well versus 21, down about 1%. Outlet centres down by the merest of margins. Strips actually delivered some growth. So strips are the clear winner. Strip locations, your Bourke Street malls, your Pitt Streets, James Streets, etc. To give you some examples, but also some of the suburban, the major strips like Bourke Road and Camberwell and so on. Sales conversion has been really strong. Inside traffic is soft. We're going to look at the different patinations of that. But certainly people are seeming to be a little bit more keen to get to these outdoor, these strip type locations. CBDs are starting to come back as well. We'll look at the patination of that also. But you can see that some of the locations are still strongly down in terms of their outside traffic and inside traffic. Outlets, they have been a lot worse. We've talked about that in prior radars. If anyone's interested in prior radars, please do reach out. Again, we're more than happy to help you out with those. These guys have been a lot softer versus some of the other metrics. They are starting to come back a little bit, which is great to see. Metro centres at the other end of the scale from strips, they were the softest at 8.6% down. So these are your typical shopping centre locations out in the burbs, not necessarily your supers, your chatties, your bondies, your Chermsides, etc. Your normal suburban sort of shopping precincts. These guys have fared the softest, and that's because inside traffic has, again, been the softest across the board at -22. So that loss of traffic, despite what happens with sales conversion and ATV, you lose over 1 in 5 of your inside traffic. It's a pretty hard pill to swallow. In terms of the various states and regions, New Zealand I've clumped up into one. But you can see that compared to 2021, no surprise, Victoria's done very well. It's amazing what you can do when you're allowed to step outside your door. New Zealand has been the softest. New South Wales has been the softest at -18 versus prior year. They had a very, very strong 2021 comparatively. Everyone else relatively flat. ACT last year seemed to be immune to everything. The rest of the states, you could throw a blanket over New Zealand and the others in their behaviours. Outside traffic very strong in Tas. Surprisingly, and Victoria have done very well. Sales conversion in a line as well. But again, when you lose that quantum of inside traffic, when you're losing 35s, 21s, 22s, you've got to do some miracles with your sales conversion, your ATVs to overcome that level of loss of traffic. In terms of categories, footwear had a cracker last year versus 21. Up over 16%. At the other end of the spectrum, we're looking at things like stationery, watches and jewellery, houseware down 10 or near enough to 10. And again, it's that loss of inside traffic. Despite what you do with your ATVs, despite what you do with your sales conversion, you lose that much traffic. It becomes quite a challenge to pick that up, and so you just don't get the same transactional quantity. Interesting to note, if you're in general merchandise and electronics and you're in footwear, some of the price rises or the basket value rises are very, very significant. I just want to put this in perspective. So this, again, I haven't done this too often, but this is compared to FY19. So footwear, although footwear had a very strong year compared to prior year, it's still about 26 points down on pre-pandemic levels. General merchandise and electronics look pretty soft against the prior year, but that's because they had a cracker in 21, and they had a blinder against where they were pre-pandemic. Again, driven largely by sales conversion and average transaction value. Houseware sales conversion up 68%. So there are certainly some benefits to having more. You've got less traffic compared to what it was. The customer, as we've said, is more purposeful. We're able to deal with them very efficiently, and they are coming in predisposed to spend very, very strongly. So that is quite a blessing. A little bit of a strong point, but there are some pretty mixed results across the categories. I just want to have a look now. So this is how traffic is behaving. So this is inside traffic shares by day of week across the different precinct types. So you can see when you look at outlet traffic, and I'll pick on outlets as an example to build us up, they're pretty flat, 11.8 to 12.5 Monday to Friday. So 12-ish% of each of your traffic is happening across each of your weekdays. You get about 40% happening across the 2 days that are the weekend. This is very, very different. I'll explain some of the changes and some of the pattern shifts that are happening, but we are seeing a shift to a lot more traffic earlier in the week and a lot more traffic happening in different ways. These aren't the spreads that we saw pre-pandemic. These aren't the spreads that we saw in 2019. And this is an aggregation of 5 months worth of data. So 5 months worth of data, 158 data points, I think it is, 155 data points or something like that, across 1,850 stores, broken down across these categories. It is January 1st to May 31st, 22 versus 2019. And what you can see when we look at the outside traffic and the inside traffic patterns, and this is breaking it down by day of week and then by hour of day. What you can see is that the late night and the evening trades, the late night Thursdays, the late night Fridays, for those centres that do the late night Saturdays and even the extendeds on Sundays, the customers, the traffic, both inside and outside, has walked away from it. So we've got almost 40% less outside traffic, almost up to 50% less inside traffic, and sometimes more than 50% less inside traffic. And it is pushing to earlier parts of the day and earlier parts of the week. So the declines are far less Monday through Wednesday and 9 a.m. through to midday than they were versus 2019. In fact, you can see that Monday has picked up almost 10% more outside traffic. Tuesday has picked up 7.5% more outside traffic. And that's coming from Wednesdays, Thursdays, and Fridays, to a lesser extent, Saturdays. Sundays has also had a bit of growth versus prior year. You can also see that inside traffic has picked up. Now, it's interesting. It's interesting that outside traffic has gone up almost 10. Inside traffic has gone up less than 6.5%. I wonder whether, and there's a bit of disparity, but I wonder whether the Sunday, Monday, Tuesday customer, whether this is where, if we're going to be a little bit more flexible in response to these changing customer patterns and these changing customer durations, I wonder whether these customers are more prone and more disposed towards our spot specials. I wonder whether our resource, our transactive capacity alignment, so I don't call it service alignment because there's so many things now that go into how we can service our customers, whether our transactive capacity needs to be realigned from these late night trades, from Thursdays and Fridays into earlier parts of the week and earlier parts of the day. Certainly, I know I've been off shop floors for a few years, but I remember, the bad old days of my A team and my B team, and my B team used to run my Sunday Mondays. I don't know that that would be the case if I was looking at this data and utilising this data anymore. I certainly think that Sundays and Mondays are gaining in strength and prominence. Strip locations have behaved very, very differently. Metro supercenters have behaved very, very differently. If this is of interest to you and you do like this sort of data and you want to have this data at a more granular level, we do have it for all the different strips. If you do want to reach out, please do let us know. We do have this data at a more granular level. If I'm looking at strips as an argument or strips as an example, you can see that, is this being recorded, Sarah? I believe it is, Sarah. And certainly the materials are available to everyone, absolutely. So we'll make sure we get that out to you. But if I was in a strip location, you're very welcome. If I was in a strip location, I'd certainly be looking at how I'm resourcing, how I'm providing transactive capacity, transactional capacity on Friday and Saturday versus my Sunday, Monday and Tuesday, bearing in mind that Sunday doesn't generate an awful lot. It's only 12% of my traffic, whereas Tuesday is now far more important, 14% of my inside traffic for the week. Wednesdays, the customer has really backed off. Friday, the customer has really backed off. Saturday, the customer has really backed off in these locations. Interestingly, Metro Supers, again, Chatties, Chermsides, Bondis, these type of centres, as an example, again, the traffic is fanning out to the extremities of the week. Thanks, Eric. Wednesday, Thursday, Friday, losing a share of traffic, much to the benefit of Monday, Tuesday. My statement of, put your B team on a Monday, I'd be changing those behaviours if they were my stores. It's based around this sort of alignment, this sort of behaviour, this sort of metric that we're seeing. I'd also be looking at, what I'm doing in those late night trades yet again. In terms of network changes, the result is I mean, sometimes these things happen, right? When you've got the granularity of hourly data and days of week, and the world is moving around you, sometimes it's hard to see this until you do elevate yourself to this level. Certainly, I think we've all felt that the pattern of trade has changed. It's very hard to quantify how it's changed. So this has hopefully been really, really helpful to you. But as a consequence, I think I'm going to guess pretty true, is we're seeing a rapid rate of increase in network changes. So refurbs, store closures, new stores, and so on. This has been rising hugely. If I had put July of this year, in even July month to date, we have been asked to do new site assessments. So will my store, if I look at this particular location, what kind of turnover can I expect out of my new presence in this location, or what kind of traffic patterns and sales conversion can I expect in this new location? We've done about 15% of our total FY22 total of new site assessments. We've done that in the first 15 days of July alone. So the rate of network change, I think we're now starting to see the uptick in the J. We're now starting to see that we are really starting to drive a lot more traffic, a lot more new site assessments as retailers start to realign to these new opportunities in centres across locations, new locations. Should I close this one down? Should I open this one up? What should my network look like? So if any of you do have those network expansion plans, I think Eric has just put up the new site assessment form. I find them invaluable. When I was in retail, I found them invaluable. I didn't make a move without one. So if there's anything we can do to assist you on that basis, again, please do reach out. The long and the short of it is sales have declined versus FY21. Inside traffic, although it's returning, we've lost a lot versus FY21. And despite what we're doing with sales conversions, despite what we're doing with ATV, it's proving hard to overcome that inside traffic decline. ATV rises in Australia are now pretty significant. How much of that is price rises? How much of that is forced upon us versus what's happening in New Zealand? Are Australian consumers more bullish? Are they expanding baskets? Are we just having high price rises in Australia? Sarah, SCR stands for sales conversion rate, the proportion of transactions divided by our inside traffic. If I have 100 people inside my store and I do 10 transactions, then my sales conversion is 10%. Apologies for using a 3-letter acronym in there. I really shouldn't be. Thank you, Pardeep, as well. But I think we're starting to see the ATV disparity between these two markets is probably now underlying different stages in their economic cycle. Perhaps I might be stepping out of my lane, but that disparity starts to look a little bit concerning on the New Zealand side of the equation. I'm not an economist, please don't think I am, but that gap was pretty significant. The important thing for retailers is that the pattern of trade has changed. I genuinely think that there's opportunity. If we align our transactive capacity to the way customers are behaving now, the way customers have moved across different precincts, if we get more granular than what we have been doing, if we get more focused on the new pattern of customer behavior, when are they walking past my store? What spot promos should I have if I do spot promos? How much transactive capacity do I put on my shop floor and when? Where now is my high value customer? And how do I meet those demands by location type, by precinct type, by store, rather than relying on this is the roster that I have done. I did rosters for, it feels like 2,000 years. It was probably a little bit longer than that, but every time I did a roster, it was based on what I'd done the year before, and the year before was based on what I'd done the year before. And it got just so ingrained. The customer has changed. This pandemic, if it's done one thing, if we are moving beyond it, if we say we are now at the new normal, then the new normal is that the customers have changed the way they're acting. The customers have moved away from the old crowds, and in doing so, have created new crowds at different ends of the day, at different ends of the week. We've got to react to that. And in doing that, that creates an opportunity. The good thing is you guys are Kepler clients, right? You guys are Kepler partners. You're engaged with this. You get the heads up, whereas most of the rest of retail don't have that. So you know what? If that means you can take $1 out of the store next door's takings for the day, and so be it, use that to your advantage. please do let us know if we can assist you on any of this front. We do have this data across a wide variety of precinct types and industry types, and that's what we're here to do and help out. That's it from me on these slides. Is there any other questions or comments, Kylie?
Yeah, while we're waiting for if anyone has any questions, I love it's really eye-opening seeing the way that traffic has changed hour by hour, because something as simple as your base rosters by location, rostering to when the traffic is there in your store rather than based on, the way we've always done things, which if you think about your typical retail business, you've got your store manager on, say 9 to 5:30, and then the covers are generally around that, what we would call the busy time of the day, which is the lunchtime period. But actually what we're seeing now, what you've proven to us, is that traffic is now, it's starting to come through earlier on in the day. So, does this also change the expectation on when we should achieve sales by a certain time throughout the day? Back when I was running retail businesses, that, you would normally have an expectation that maybe it's that you're at 60% of your sales target at 1 o'clock, but actually should that benchmark be high now that we're seeing that the volume of traffic is coming in more so in the morning now, which is exactly what this is demonstrating in the inside traffic. So, for me, if I was the head of retail or state or area manager, that I would actually really be going back and having a look over, if I haven't already done so yet, because to be honest, quite a few of our clients have been talking to us about this already, is that they should be going back and actually having a look at, by location, what does that base roster look like? And am I scheduling my store manager at the right time on the right days? And because generally, a lot of retailers have their store managers on a Thursday night, for example. That's a perfect example. Should they be rostered then? Is that actually when, are we actually putting our aces in places on the Thursday evenings?
Yeah.
So that's an exciting one to hear from you, Tony.
Yeah, thank you. Look, I haven't thought about, you can't beat the old retailer out of me, but I haven't started thinking about, when do I communicate to my store managers? I used to have a blanket period. No one calls stores between 11 a.m. and 2 p.m. Is that the new norm? Is that what we should be doing right now? When do we have stock drops? What day of the week and what time of the day should we be having stock drops? So all of these things, that's what I mean by transactive capacity. So thank you for picking up on that, Kylie. That's fantastic. Thank you.
Yeah, I think, we do get stuck in a rut, right? We might have our weekly conference calls at 9 a.m. on a Tuesday morning, but actually does that need to move? Because actually, are we taking our managers off the store floor at a time when they should be selling or interacting with their team on the floor? So that was a really exciting one. One of the things I actually wanted to ask you, Tony, because I noticed in the audience, you might not be able to see, but there's quite a few newer, I think some non-Kepler clients. So some of the people in the audience might be wondering what a new site assessment is. I know we've posted some information about it, but could you explain it for those who might not be used to what a new site assessment is at Kepler?
Yeah, absolutely. Look, like I said, I didn't make a move in my network without one. So a new site assessment, if I was planning to open up a new store and I was in discussions with a landlord and I'd picked my location. So I was in shop ABC 123 in generic shopping centre D. I would go to Kepler and say, listen, this is where I want to be. Kepler then looks at traffic patternations throughout the centre by day of week, by month of year, compares it to surrounding locations that they will have, that Kepler has sensors in, builds up a traffic pattern for that store, then builds up a best fit profile for shopfront conversion, sales conversions and ATVs based on that centre. I know there's a couple of questions I will come up, Doug and Colin. Thank you for your questions. We build up a consumer behaviour pattern based around that traffic patternation for that prospective store. And we give you a forecast. We actually dollarize it out and we say, listen, based on this sort of behaviour of traffic, outside, inside, shopfront conversion, ATV, etc., here is a model that your store should be looking to achieve. Now, it's built in a way that it becomes variable for you so that you can adjust. You think, I think my sales conversion will be 18% instead of 16% that you forecast because I plan to do this in this store and so on and so forth. But it forecasts out what your net turnover should be. Like I said, I didn't move without one. I think they're a very valuable thing. At $950, they're a snip. You get a store wrong, and it's going to cost you a hell of a lot more than $1,000. But anyway, so that's new site assessments.
Great. And it's interesting too that I've noticed across the board that just when we thought things were slowing down with, store openings, is that it's fired up again with expansions, refurbishments. It seems to be all systems firing at the moment for a lot of retailers to expand, and a lot of online now actually opening the bricks and mortar, which is really telling us that it's just really highlighting the fact of how important bricks and mortar still really is for a lot of businesses. There are a few questions there. There's one from Doug there, Tony. I'll let you have a
Yep.
Have a read.
Yeah, so absolutely, Doug. We do have the transactions. We have all of these metrics by hour of day and day of week for all of our key metrics. So there are transactions included. So Doug, certainly if you want to give me a call later on this afternoon, mate, A, it'd be great to have a chat to you again. B, I do have those numbers for you for sure. And yeah, you're right. Look, sales conversion will decline as traffic goes up. That's where I start to look at other metrics like average visitor value. So what is the value of the traffic that comes into our stores? How do we engage? The underlying premise around sales conversion dropping as inside traffic goes up is we're assuming that the additional people that are coming in are not necessarily customers. I might be very old school. Again, that's a hard pill for me to swallow. I know it happens, right? I know there are hangers on. I know there are browsers. I know there are friends. I know there are group size metrics. I still like to think that everyone that comes into my store, I'm good enough to be able to transact with them. But there is that natural decline. But certainly looking at transaction numbers and perhaps even that average visitor value, sales dollars divided by how many people I had in my store. Did my store meet the needs? This is when I talk about transactive capacity. It wasn't just service. It was, are my fitting rooms available? Is my merchandising on point? Is my store navigation and my store journey on point? If I look at product A, do I automatically see product B that is affiliated with it? Am I encouraged to purchase? Is ticketing neat? Is it clean? Am I understanding the range? Am I understanding everything I need that allows me as a browser, I hate that word, as a browser to be able to commit to that product and make that emotional investment? I think Colin's question was answered. Thank you, David, for answering that one. And there's a question from Sarah, came in late, but based on the new behaviour, are we a better place to move spend to driving more traffic outside centres or spend in the store attract? Oh, Sarah, the question of the new millennium. Wow, that's a cracker. I'm opinionated. You may have picked that up. For those of you that know me, you will already know that I'm opinionated. I think the challenge, certainly it was the challenge pre-pandemic. It was getting bad. Then the pandemic gave us a bit of a gift. So shopfront conversion went up for the first time in a very long time during the early stages of the pandemic. Sarah, we had a lot more proportion of people walking into our stores that were outside our stores than before. I've been watching this metric, this shopfront conversion. I've been watching it decline for a few years, and it was starting to give me hives. Now the pandemic reversed it, breathed a sigh of relief. I'm now starting to see it go the other way in a really rapid rate. Customers that are coming into centres are purposeful. So that's why I think, to Doug's point as well, that we're seeing that sales conversion was going up, because the traffic that had gone away were the traffic that was probably not going to purchase, at least maybe not purchase today in your stores, but it was the hangers on, the also-rans that had certainly dissipated. Customers that are coming into your store have got that intention. But there's still a lot of traffic that's out there. My opinion, my suggestion, Sarah, is if they're in the centres and you're paying rent, no rent is cheap. If you're paying rent, spend the money to drag them in, but target it based on those days where customers are now existing more. I think Sunday, Monday, Tuesday probably offer, for most location types, probably offer the best bang for buck in terms of trying to drag them in. Spot promos, they certainly seem to be coming into the precincts more heavily on those days, and they are more disposed to walk into stores on those days, but probably not to the same level that they're coming into the centre. I think if you've got that investment, if you've got that location, and you've got a layer of predisposed shoppers. Let the shopping centre do the work of bringing them into you. Let your brand do the work of bringing them into you. Your websites, all of those other things, your omni-channel experiences that you're offering to customers, that's all bringing them to you. I'd be spending the extra dollars on, once they're in the centre, dragging them into your store. You'd want to be equipping your staff with, shepherd's crooks, because once they're in there, even though sales conversion rates are coming back to where they were last year, they're still a lot higher than where they were pre-pandemic. So customers are still disposed to purchase, and they're purchasing really well. ATVs are still really quite high. So I think the return on investment is dragging them into store when they're in the shopping precinct. But I'd be really, really happy to have that as a wider discussion with you as well, on a one-on-one basis, specifically with your context in place. So please do reach out and let us know. But that's my top line.
Fantastic. Thank you, Tony. There's some amazing questions there. I'm actually going to ask David Gordon, our CEO, to join the stage as well. So, Tony, that was some really exciting, juicy stuff, and I think I could sit here and hear it all day, and there's some amazing takeaways. So thank you very much for that, Tony. And it sounds like you've got a couple of sessions lined up from some of the others in the audience. So please welcome David Gordon, who is the Kepler Analytics CEO. Here he comes. We're waiting for your camera and your mic to go on, David. Over to you.
That was great, and thanks for those terrific questions. I just want to emphasize a few things, and I want to add a couple of extra things that we're hearing and we're seeing in our data. The first things is, what is worrying retailers at the moment? There are a couple of things that are worrying retailers mostly. There are two components of cost. First of all, CPI, and essentially every retailer, as we know, has got a CPI component of their lease agreement. So in the past, it hasn't been a problem because there's been no CPI. No. So when Westfield says CPI plus 2%, we know we're going to pay them 2%. Right now, we can pay them anything from 5 to 7 to 9%, depending on where the CPI is going. So the landlords that were smart enough to go CPI plus, as opposed to those landlords that were short-sighted, who basically said, just give me 3%, and I'll be happy on my annual increase. Those are the ones that are now being seen to be short-sighted. The other one that people are concerned about is this whole concept of wages. So essentially, as we know, the Productivity Commission has basically said minimum wages increased by 5.2%. On top of that, we got a 0.5% for super. Some of our employees will be on minimum wages, some of them won't be. But what we do know is that when minimum wage levels go up, everything else goes up, especially in this environment of essentially full employment. We all know that we're having to pay more to get staff when we very often can't find staff. So those two cost focuses, rental and wages, are becoming an issue. And the third one is a demand focus. In the last 2 or 3 years, as retailers, we've all felt comfortable that whatever reduction in sales we had in the store, we'd be able to make some of it back and feel a bit more comfortable because our web sales were going up. Well, the news is that web sales are not going up. Certainly not as much as they were, and in many cases, they're actually reducing. So that comfort level is not there. What is going up, and we all understand that, is click and collect, and that's symptomatic of people not wanting to web shop, but not wanting to be in the store. So those are the three key messages that we've certainly been hearing. The traffic coming back to the centre, there's been a bit of talk about that. There is traffic coming back to the centre, but it's not deep traffic. In other words, it's not quality traffic. Your landlords might be telling you that our traffic's back to where it was and all that type of thing. That relates to visitors to the centre, or as they say, to entries into the centre. What it doesn't relate to is how deep they go into the centre. And that relates to that reason for coming to the centre. So we agree that there are a lot more people when they're in the centre browsing, but many people go to the centre because they have a targeted visit. I'm going to these 3 stores. So we might have a lot more people in the centre, but we have pretty much the same people going into the stores. And it's your brand that gets them into the store, your brand and your activity. So essentially, if that person, the vast majority of people, if they have decided not to visit your brand or not your brand not to be one of their visits in the store, in the centre during their centre visit, they're not going to see you. So that whole concept of brand and relevance to their lifestyle and so on is as important as it ever was. Saying that, agree with Tony that there are a lot more browsers, and to some extent that's why our conversion rates, our sales conversion rates are going down. We're having to work harder to convert the level of people in our stores, because a lot of them aren't just coming in to buy. So our salespeople need to be trained, and it's the old retail. We're back to old retail there to some extent, in that our salespeople need to be really spot on, product knowledge, sales knowledge, and so on and so on. The other thing we're finding, and this was also touched upon, is the reconfiguration of store networks. As Tony said, the amount of new site assessments we've been requested is massive. But more important than that, the amount of new stores, closed stores and refurbished or moved stores that we're getting is phenomenal. Something like 60 to 80 a month or every 2 weeks or so. It's massive. It's a very big percentage of retailers are continuing to reconfigure their store networks, moving from that centre to another place in the centre, or closing one centre and opening another. The last thing I'd like to say is that anyone who hasn't been invited, we have a user conference on the 5th and 6th of October in Melbourne. We've got an evening of networking on the 5th, and during the 6th we've got a lot of key speakers, panelists, and we've got an amazing day planned. We thought we'd get, it's our very first one, we thought we'd get 50 or 60 people. We're up to 75, 80 people now. So anyone who wants to come who's a client, and anyone who's thinking of becoming a client, we'd be happy to have you there. Last thing is, for our clients, on the 5th of August, we'll be launching a new help desk process. So just be aware of that, and we'll be communicating with you next week in terms of what that new help desk process looks like. We are very focused on customer service and what we do with our customers. We think our new help desk process will allow you to understand your data and what's going on within your data, and to be serviced by people who know and can check that in a much more methodical and a speedier way. So if anybody wants to talk about this any further, please let me know. But once again, thank you so much for your attendance. Thanks to Tony. Thanks to Kylie. I'll hand you back to Kylie to wrap.
Fantastic. Thank you, David. So thank you again for everyone joining us today. We'll make sure that we'll send out the information that covers the presentation that Tony shared with us today. Also some information around the new site assessments and the Kepler Retail Index, if you're also interested. And also for those who haven't joined or RSVP'd to our user conference, we'll send that all in the one pack for you. Thanks again, everyone, and we hope you have a wonderful day, and hopefully it gets a bit warmer for you for those in Melbourne. Have a great day. See you later.